Hi there, welcome to another edition of TokStocks. I'm your host, Kier Reynolds, and today we're lucky enough to have Andrew Pollard, President and CEO of Blackrock Silver, with us again for an update. I think it was almost to the day a year ago that we last
Happy
spoke.
anniversary.
Yeah, yeah, thank you. Good to see you again. You're looking fit. Maybe these high metal prices are not just working out for your stock portfolio, but also for the fitness.
Thank you. Yeah, listen, I'll take every compliment I can get.
Yeah, we don't get a chance to see each other too much in person. But anyways, nice to see you on camera here. Before we get too much into it, let's get our 60-second pitch out of the way. First question: what is the name and stock ticker of your company?
Well, that's a layup one. BlackRock Silver, we're BRC on the TSX Venture and BKRRF on the OTCQX.
And what is BlackRock Silver's mission and vision?
Oh, that's an existential question, isn't it? Well, about 4 years ago, we effected a consolidation of what we saw as the extension of one of the most prolific silver districts in America. And over the last 4 years, we've proved that concept. We've drilled out 100 million ounces on our flagship Tonopah West project. It's emerged as easily the highest grade silver development stage project globally right now, with a head grade close to 570 grams per ton. And just last month, we put out our first PEA, which outlines this is going to be a massive producer, 8.6 million ounces silver equivalent at under $12 all in cost. So very high margin because of the grade. And in terms of our vision, well, our focus now is growing it. We've got an 8-year mine life. We think with the drilling we're doing this year, we can take it up to 11, 12, 13 years when all is said and done.
How many shares are outstanding, and what is your current market cap?
Yeah, so right now I think we're standing around 275 million outstanding, puts us 135, 140 million, depending on the day, call it 100 million US. Um, yeah, so we've gained a lot of prominence recently on the back of the PEA and some of our first drill results from our conversion and expansion program. But compared to our peers, I mean, on an ounce in the ground basis, these have the potential to be the highest margin ounces in the industry. And right now we're trading at about half the ounce in the ground valuation that our other high grade peers are.
What's the insider ownership percentage these days?
Not enough. My goodness. I wish I loaded up when I came into the company when we were 3 cents, but I own just a little over 5 million shares. I think total insider ownership equates to about 3.5% or so. This wasn't a new deal. So no one came in with seed stock or 1 cent paper. Every share that's been granted is, as my position was built largely in the market, largely supporting the financings over the years, and it's been increasing. I think when I started, I had about 2 million shares. Now I'm looking at north of 5 million.
Are you fully funded for the next 12 months?
This is the best financial position we've had in years. We've done about $20 million in financings this year, all at better valuations. Got 10 million of that from Eric Sprott. We're one of his largest silver bets this year, and that's a good bet considering he's the world's biggest silver bug. So he's got a lot of confidence in us. So right now, with the drilling we're doing, we've probably got about 10 million or so in the treasury. I expect we'll end the year with around 7 million Canadian, which gives us a huge runway to keep things moving into Q1. And as I said, we've had the drills turning at site full tilt since the end of July. That program's set to wrap up in December, but now because of the financial position and because of the early, I guess, promising drill results we've had so far and the looks of the core, we're going to keep expanding that program well into the new year.
And what are a couple of short-term catalysts that investors should be on the lookout for?
Yeah, well, listen, our PEA, I mean, it's at $23 silver and $1,900 gold. I mean, it's already got a 40% after-tax IRR. What we're trying to do now is really two-pronged. We want to take our mine life from 8 to well beyond 10 years. We think that's wildly realistic with the drilling that we're doing right now, which is fully funded. The other prong of our focus this year is to de-risk our ounces. So our PEA outlines about a 2.3-year payback period. What we're doing now is we're using that same mine plan to de-risk all of those ounces through the first 3 years or so of production. So we're tightening up the drill spacing, converting our inferred resources to M&I, on about 25-meter centers to raise that confidence. Not only by doing that do we de-risk the ounces, but we also think we'll be able to compress that payback period quite substantially, because as we tighten up the drill spacing and continuing to hit at the grades we are, we think the M&I grade is going to rocket up. This is the first few years we're drilling into a structure that I think will be the highest grade structure in the entire industry when all is said and done. And that makes for a very rosy start for investors. When you can mine a really, really high grade, shallow set of veins right away, that effectively pays for everything like that.
Awesome. Well, hey, thanks very much. That concludes our 60-second pitch. Why don't we fall back in our regular scheduled programming here? Maybe you could just give, for those of my audience that weren't able to catch our first interview, maybe you could just go back over sort of your background, who you are, how you got into the business.
Sure. Well, listen, I'm coming up on 20 years in the mining industry. I started when I was 14, as you can imagine. My background, I was a consultant, so I ran what's called an executive search firm, and I was focused exclusively just on building management teams for mining companies. So I'd work with a lot of pre-IPO new stories out there. I'd also work with a lot of stories that were turning the corner, those going from exploration to development to production, all of which require different skill sets and uh, I guess, expertise. Often I'd get the call when a company was really failing and they needed to make a big change at the top. So you're looking at turnarounds. And over about 15 years of doing that, I developed, what was a truly world-class little black book of talent. I'd work with everything from pre-IPO to, doing some executive searches for companies like BHP on the copper division and a lot of the developers now making a lot of news. I mean, 4 or 5 years ago, were troubled companies, and I was behind the scenes and in the boardroom helping to affect some of these changes. So, 15 years doing that, and over time, as I got more entrenched and immersed in the industry, I started writing bigger and bigger checks into companies. Companies I believed. Generally, I'd be investing in management teams, sometimes just purely on the project. And when I came to BlackRock, I originally came in as an investor in 2018. I didn't really know the management team I was investing in, but I really liked the project that they just picked up. It's actually still in our portfolio. It's a very grassroots greenfield opportunity in northern Nevada. I knew the lineage of that history, and it was the first time it had ever been in a junior. So at that time, I'd written about $100,000 check, the 10-cent financing they were doing right when they picked it up. Fast forward about a year and a half later, nothing had been done at the project level. A lot of my contacts in the industry had followed me into the company too. And it was, to say it was circling the gutter would be kind. It was halfway down the drain. Something needed to be done. I saw it, primarily as a management issue. It wasn't a project issue. And, May of 2020, the stock was $1 million market cap, 3 cents, if anyone was even courageous enough to put a bid in. And I just came in, effected a takeover, I guess, without really firing a single shot, simply because the other management team just ran out of all options. They couldn't finance it. And I wanted to give investors a chance. So the narrative at the time was, a recruiter comes in, opens his little black book, brings in a top tier management team. I was just going to join on an interim basis, frankly, because no one wanted the job. And for me, it was a little embarrassing to join a $1 million company. But what I did was, over a series of maybe 3 months, I just kept building out the board. My first hire, a week after, I brought on the former VP exploration of Placer Dome, who had oversight over all of their projects in Nevada. The guy's found 100 million ounces of gold. That was a good start. 6 months after Bill joined, he's our executive chairman and head of operations. He brought me an opportunity, the Tonopah opportunity. And I knew nothing much about silver at that time, but I knew to put my trust in Bill. You hire good people and then you listen to them. And we went from 3 cents in May of 2019 to $1.60 in July of 2020 on the back of our first discovery hole on that very project. And here we are 4 years later, put out 3 technical reports. We've been one of the most active exploration companies in the silver space. Here we are 4 years later with a preliminary economic assessment, which shows this is likely going to be one of the lowest all-in cash cost mines globally. From a silver and gold production profile, very, very similar to what Silvercrest is producing at right now. Similar production profile, similar cash costs. The only difference is, they just got taken out for $2 billion. And I see the vision ahead, at $140 million market cap. If I don't screw it up over the next couple of years, we've got, I think, potential to be certainly over $1 billion valuation if we can move it forward the way we think we can.
Hey, I like to hear that. So I got to give you some kudos. A year ago when we got on, we talked a little macro, and you sort of alluded saying, "Hey, we really just got to wait for these interest rates to start going down. We got to wait for the U.S. Fed to sort of stop raising interest rates and start cutting them. It's going to hopefully propel metals." Back when we were talking, it was $23 silver.
Right.
Your stock price was under 30 cents. I think it was 26, 27 cents the day we chatted. Fast forward, and we got $34 silver, up about 30%. And we've got your company, which is up over 100% since we last chatted, thereby sort of showing kind of the leverage that some of these juniors sort of offer, which was, I think, part of your kind of case, your macro sort of case, and you made that case very well for us on our last episode a year ago. So thanks very much for that. Any sort of what's your crystal ball sort of look like today? Any macro thoughts for us before we
Well, I
dive
think
in
the
and
crystal
talk?
ball, the crystal ball was a little broken last year in the sense that if you go back to October, November, the market was effectively pricing in 100% probability that rate cuts would start as of January, and then they just kept getting pushed back and pushed back and pushed back. Gold was breaking out well before the first rate cut came in, and that was largely driven by central bank buying, China, Russia, India. It's for gold to hit an all-time high before the first rate cut happened was truly astonishing. And silver's obviously doing exactly what silver does at the beginning of a secular bull market. It tends to lag gold, and then it wildly overshoots. And it's just starting to wake up. I mean, yeah, it's $34 now, but I'll tell you what, none of my investors are investing in the space for $34 silver, as exciting as it is. That said, the best thing about our project is we don't need $34 silver or 40 or 50 or 60. Our project is wildly robust at $23 silver and $1,900 gold, and even much lower prices because of the grade. This is a project which, the lights get turned on, you develop it, and the lights will never get turned off. And it is highly levered to the upside. So we're in a really good position. Interest is starting to come back into the sector. You've seen M&A start to pick up, which is a brand new phenomenon. The last few years, there's been very, very little M&A activity, and the ones that did happen were the troubled special situations, the companies that were over levered, couldn't pay off their debt, they were spiraling out of control, and then you'd have the opportunistic mid tiers and large caps purchase them for pennies on the dollar when there's blood in the streets. Now, what you're seeing in just the last month or so, you've seen two massive deals hit the space with the Gatto's First Majestic merger and then the Silvercrest Core Mining merger, which effectively eliminates two of the very high margin single asset producers out there. And it just makes the universe of actual targets get that much smaller as the quality cash flowing companies are getting picked off one by one.
Have you been attending many conferences?
Yeah, listen, I've been living out of the suitcase for, ever since we came out with our PEA. We timed that PEA perfectly in the sense that we got it out the week right before Beaver Creek. So we were able to have some very, very productive meetings. And for those that don't know, Beaver Creek's probably the best conference all year for companies of our size and stature. Not only are you meeting with institutions, portfolio managers, analysts, but lots of corporates. So I'd say 80% of our meetings down there were with the corporates, the producers, the mid tiers, looking to fill out their pipeline. And we certainly made some waves down there with those economics. Since then, right after that, actually, we took a handful of analysts straight from Beaver Creek and took them right to the site to see it firsthand as well. And then, I mean, I've just come back from 2 straight weeks on the road of conferences, Toronto, and Nassau in the Bahamas, where there's apparently a little bit of money down there.
Yeah, good stuff, and sometimes some nice weather. So
Yeah. Well,
yeah,
it's hard to beat Vancouver in October, but if I have to go to the Bahamas, I have to.
there you are. So also since we last chatted, you kind of alluded to it. You've raised over $20 million. I think you did three separate financings. When I was chatting with you, you didn't have a whole lot of money in the bank, and you weren't sure how much drilling you might be able to do, thinking maybe having to push it off.
Right.
Wow, that certainly turned around here significantly. Maybe you could talk a bit about how you sort of like raised the money, and a little bit about maybe
Yeah,
an
well, yeah.
interesting lead
So we've done
investor.
three separate deals this year. The first one, was particularly painful. I mean, we did a 20-cent round. It was a $5 million bought deal, but we had some really, really strong supporters in that taking big positions. And, I hated the valuation. I mean, I was sick to my stomach doing it, but I also knew it was a necessary evil. Getting, high quality institutions and shareholders in at low prices when you can see the future, when you know what you're going to do with that money, we saw that as a real opportunity, and then things just went very much according to plan as we went. We used that money to buy out our property, so we now control 100% ownership of our project, and we also used a significant portion of that to get our PEA going behind the scenes, getting all the consultants involved, for which took us the better part of 9 months from start to finish there. Along the way, gold and silver broke up. We were able to do a $10 million bought deal in June at much higher prices. I think that was at 32 cents with a half warrant. That allowed us to finally have a treasury that allowed for a meaningful drill program. The first drill program we've done in about a year and a half. I guess, as going back to my crystal ball, last year we didn't see the drill results just weren't getting respected in the market. And as the outlook at the time was that rate cuts were imminent, we decided to hold off. We put our head down last year and got a resource out towards the end of the year where we 2.5 extra ounces, going from 45 million to just over 100 million ounces. But we took our foot off the gas pedal. So, retail is fickle, and obviously, like, if you put out great news but you don't have something to follow it up, a constant drumbeat of activity to show the progress, you can fade pretty quickly. And that's what happened to us. Granted, we knew the quality of the resource we did. And when we saw our valuation after putting that out last year, it became apparent that the market was just truly lost. They couldn't grasp the economic potential of those ounces. So, yeah, we decided to do the hard yards, get the engineers involved, show how you're going to mine it, show the cost to build a mill and process plant, show the cost to go underground, and really make the economic case for the project. And that was obviously the right thing to do. Once we got that out, the market finally realized that there was, one hell of a deposit. But, that was another 9 months of not drilling. So by getting that money in the bank in June, while we knew that we had this looming catalyst, coming down the pipeline towards the end of the summer, we figured finally we've got an opportunity to not only put out a report, which we think will, put us certainly in a new class. I mean, there's only so many silver development stories out there, but following it up with the first drilling in a couple of years, and it's been a good 1-2 punch so far. So we came out with that PEA at the beginning of September. We were about 25 cents. The week later, Eric Sprott came in again in an Eric only financing where he actually paid above market, zero warrants, zero half warrants, to give us even more, put more wind in our sails, I guess. And we've gone from 25 cents on announcement of the PEA to about 40 cents when we put out our first set of drill holes, and on the back of that, just a couple of weeks ago, we ran up to 58 cents on massive volume. We're going to do about 40 million shares or so for the month of October, which is probably 2.5 to 3x what we did in September. And September was a big month.
Yeah, and let's maybe unpack a little bit on the last set of drill results. Some pretty eye-popping grades. Maybe you could, would if you wouldn't mind going through the highlights of kind of what you
Sure.
announced.
Yeah, well, listen. So, as I said, our focus for this drill program is it's very straightforward. We're not focused on adding random ounces. We want to add mine life at this point. The other thing is we want to de-risk our ounces through that early production. So through the payback period that's outlined. So the first set of results we did were from our M&I conversion program, where we're going into um, uh, the shallowest, highest grade structure on our property. That's right where the decline's projected to go. And we just started tightening up the drill spacing. So I think one of the reasons why the set of drill results we put out was so meaningful was for the very nature that our mine plan currently, it starts around 200 meters below surface, and that's where you start mining. What was so unique and promising about the first set of drill holes we released was we actually hit a new structure about 40 meters closer to surface, so 160 meters down hole. And it's some of the highest grade drill holes we've ever had. In fact, the highest grade intercept we've ever had as a company was in our second drill hole of that program, where we hit 8.5 kilos or so over about a meter. If you look at a wider vein, it's about it was 3.6 kilos over 2.7 meters. So nice, high grade, thick, mineable veins, closer to surface than originally planned. And what that means is if you can start mining even earlier, that's less pre-production development required, and shorten should really compress that payback. So yeah, we our first set of M&I holes came back with over a handful of plus kilogram per ton silver equivalent readings, and that just shows the market that the high grade hangs together as anticipated. And we never had any trepidation about that, because we're literally picking up right where the historic miners left off nearly 100 years ago. And 100 years ago, the Tonopah Silver District was seen as the richest place on earth. So, I think we got a penalty on our valuation because thus far our entire resource and PEA is based off of inferred resources. So when we were able to meaningfully show on those first 10 holes or so that the high grade hangs together in a big way, boom, like people get it now.
Excellent. And how many drill rigs do you have turning? And those started in July? Is that correct?
Yeah. So we've been popping out 2 to 3 holes every week. What we do is we started off with 3 drill rigs at site. One's an RC rig, and what we use with the RC rig to do is to about pre-drill our holes about 2/3 of the ways down, and right before you enter the zone, you switch out the RC rig and you finish it off with a core rig, so you can get those nice the core visuals on it and data. So the RC is good because it's probably 1/3 the cost and twice as fast as the core rig. So you're pumping out all these holes. So we had an RC rig there, pre-drilled 50 holes for us, and now we're left with 2 core rigs finishing off this program. Since we hit this new structure, which I mentioned nearer surface, we added another 7 drill holes just in that one area. So we've expanded the program already. And, I think our next set of results, which will come out some point in mid-November, I think, those will not only include even more M&I conversion drilling, but they'll also include some of our first resource expansion holes, where we're trying to add a kilometer of mineralization on a handful of veins, so a vein corridor, and bring that into our mine plan next year, which we think will blow out our mine life.
Excellent. And so you put out a preliminary PEA, and you did that in early September. There's some pretty interesting numbers. IRR of 39%, after tax NPV of over 320 million, and at fairly conservative metal prices. How would you go and mine that? What was the sort of mining method that was contemplated?
Yeah, well, listen, the nice thing about our deposit is it's going to be about as vanilla of an operation as you could possibly have. The PEA, so it's an underground high grade vein system, very very straightforward. Our deposit, with the way the veins are oriented, they lend themselves well to long hole stoping. So about 75% of the mining would be long hole stoping, 25% cut and fill. Then really all you have to do is crush the rock. So there's a 3-stage crusher, and then you finish it off in a Merrill Crowe. So, cyanide agitation, give it about 96 hours or so, and you're left with what will become a doré at site. Because it's just silver and gold only in our resource, we don't have to go through the extra steps of doing flotation or making a lead or zinc concentrate. We don't have to pay a smelter. You just crush it, grind it, and you're left with gold, silver, and dust.
Excellent. And where's you mentioned earlier, what's the resources now for the project? Where do they sort of stand?
So we've got a global resource of 100 million. Now, we actually excluded about 12 million ounces from our mine plan. It's an area we called Northwest Step Out Deposit, and that's a 1 kilometer step out along the same vein corridor which is currently the basis for a mine plan. So what that 12 million ounces, it's a pot of gold at the end of the rainbow. And what we've got is we've got a vein corridor that has a substantial amount of mineralization here, mineralization over here. And then all we're doing this year is drilling in between the gaps to take it from two separate deposits into one big system. So really, really straightforward resource expansion style drilling. We've got bookended with mineralization on both ends, and now we're just deploying the capital to lock in the ounces via the drill bit. So not only will we add, a brand new kilometer of strike, but we'll also liberate those 12 million ounces, which are orphaned from this mine plan, and bring that into the mix too. So very, very straightforward paint by numbers approach to growing out our mine life here. But, as you said, at the base case numbers, yeah, $23 silver, $1,900 gold. We're looking at a 2-to-1 MPV to CapEx ratio already. Now, where things get exciting is, this project works at those numbers, but if you look at the 20% upside base case, so 2280 gold, 2760 silver, our NPV escalates up to just under $500 million US, and our IRR rockets up to about 55%. Now, even $27 silver seems like a distant memory now. So if you're looking at current prices, it's going to keep moving. So we've got a lot of torque leverage to the upside, but downside, this is something that, whether we build it or whether someone buys us and builds it themselves, you're not going to end up with egg on your face. This is going to be very straightforward and frankly cheap to advance and develop.
And a little bit about where your project's situated. Maybe you can sort of give an overview on where it's located, what the ownership of the land is.
Right.
Is it
Yeah. Well,
privately
listen,
owned?
we're right dab smack in the middle of the Walker Lane Trend, which is in the silver state of Nevada. Nevada is known as the Silver State primarily because of our property. It's the second largest historic silver district in Nevada, second only the Comstock Lode. So where we are, we're about 3 hour drive from Las Vegas and about 4 hours from Reno, truly the halfway point. And the highway that connects Vegas to Reno literally cuts right across our property. The town of Tonopah, which was literally the center of Nevada, it was the Las Vegas of Nevada in the early 1900s, is about 3 kilometers from where our mine is. So the town of Tonopah is there because that's where the original discoveries were made in 1900. And over time, all of the discoveries, the system moved to the west. So the west side of the district, which we consolidated and brought together in 2020, represented what we thought was going to be the intact unmined extension of this very, very famous district. And truly, we've now picked up and drilled out 4 kilometers of strike along this very same vein corridor that the old timers produced, nearly 200 million ounces of silver and 2 million ounces of gold from. So we've got it's truly the best of both worlds. We've got infrastructure. We don't need to move power lines or build roads. There's probably 10 to 15 hotels and motels within walking distance. There's even a Burger King and a Subway sandwich shop on our property, right along the highway there. It's flat. It's easy to work to. You can drill it 12 months of the year. You don't need helicopters. We don't need to, when it comes to water, we get our water from the fire hydrants for the drilling. And what's very nice about this is obviously Nevada is a good place to be, when it comes to mining. But our entire project, our entire resource, our entire mine plan is on private land in Nevada, which is probably the best setup you could have in the entire world in terms of moving a project forward and expedited through permitting. And that's because it's private land. It means there's no federal government oversight in what we're doing whatsoever. So you're only dealing with state and county regulators when it comes to moving it forward. So where it would take, if we were on BLM land, federal land in Nevada, it might take us 5 to 7 years to get a permit. With ours, once we finish our baseline studies and get to a point where we've got a mine plan that we want to submit to the regulators, you're looking at about a 12 to 14 month turnaround time. So, the Lassonde curve works. Everyone's seen it. And typically the Lassonde curve has a very elongated, very boring dip, which is generally companies waiting and permitting purgatory for years and years of whether you'll get something done or whether you won't. With us, you won't have it. You'll be driving the project forward concurrently while you're awaiting your permits. So very, very quick path to getting this thing built and developed and frankly spitting out cash.
So just to reiterate, very clearly, your next sort of steps that you're going to do to advance the project. So what are the next like three things that we should sort of expect in terms of you advancing the project?
We're never going to have an opportunity in front of us to add more ounces quicker and cheaper than we've got staring us, right now. We think, if we can increase our mine life by 40 or 50%, take it from 8 to 12 years and keep our capex the same. um, you know, our our project, those economic numbers, which are already really, really good, standouts in the industry, will just be absolutely blowout. And we think with all the drilling we want to get done this year, if we can add another 40 or 50% of our mine life while also de-risking our ounces through the early years of production, we'll be able to redo our PEA with this new mine plan, longer mine life, have that out sometime towards the end of next year. And in the interim, just nothing but drill results. We're going to go pedal to the metal for the foreseeable future here.
And how many meters do you think you'd approximately like do? How
Yeah,
much did
well,
you?
we're originally planning on just doing 20,000 meters this year. I think we'll end up doing about 22,000 with the drill holes that we've got added to this program, and then next year I assume we'll probably do something similar in that order. And we're well financed to do that at this point. In fact, one of the nice things about running with the huge volume that we've had and the surge in share prices is we've had a substantial amount of warrant money come in the door recently. So we're effectively topping up our treasury right as we're spending it. So we're staying in the same financial position while we're investing huge amounts into the project. So as I said, this is the best setup we've had, and yeah, nothing but drill results into what we think is going to be the highest grade structure in the industry.
What are some top reasons for retail investors to consider BlackRock as
Well,
sort of a play for precious metal or silver?
listen, we think we can produce 8.6 million silver equivalent ounces a year. That would put us, as I said, similar production profile to Silvercrest and very similar cash cost too. We can do whether it's silver or whether it's widgets. If you're producing 8.6 million units of something, and it costs you $12 to produce, and you can sell it for 34, 35. I mean, that's one hell of a business. So we're just in mining, grade is king. This is the highest grade story in the industry of the developers. We're 55% higher head grade than our next closest peer comp. And we think that, all ounces aren't created equal. Our ounces, we think, will have the highest margin of any of our peer comps. So every ounce we add means more money on the bottom line, more to the NPV, more to the IRR. So listen, if depending on your outlook for gold and silver, and I think the outlook's pretty darn good, with more rate cuts expected, with central banks buying. Hell, Russia even started adding silver to their own central bank recently, to their own reserve, which is very interesting. The outlook's never been better. Silver's, still 85-1 silver gold ratio, which is historically quite high. So once silver starts catching up and potentially overshooting gold here, that's when you're going to see huge volatility to the upside. A rising tide's going to raise all boats. Right now, as I said, we're trading at about half the ounce in the ground valuation than some of our other high grade peers. That's despite us being in the best mining jurisdiction on the planet, clear permitting regime, and higher grade than any other story out there right now. So you can get the highest grade ounces in the ground with drill results lined up. That's going to have clear catalyst next year. I think we should have. I expect everyone to do well, but I think relative to everyone, we should be outperforming in a big way, and we're just starting to see that now.
Are you at all surprised where metal prices have been over the last year?
Gold's doing exactly what I mean. Gold's been old faithful. It's been a beautiful looking chart. Silver, I'm surprised it hasn't moved more yet, but we've seen some big days. I mean, it was just a couple weeks ago where silver gapped up like 8% in one day, and we did 8 million shares on that day. I mean, when silver makes moves like that, the algorithms go crazy on the exchanges, and you'll see absolutely massive amounts of volume come in. We've seen we had valuations are still way below what they were 2.5 years ago pre-rate cut. Back then, high grade ounces, mine included, Vizslas, Dolly Vardens, we were all commanding about $2.50 to $3 an ounce in the ground. Today, they're commanding about $1.90 an ounce. We're commanding about 98 cents an ounce. So we felt the leverage to the downside as the markets went out, but we're all levered call options on the price of silver on the way up, and I think there's more leverage in our pool. We're the beach ball that's being held underwater right now, but we're going to be going right up pretty quickly here with everything we've got lined up. So this is the best. The next 12 months or so probably will be the most exciting time that I think we've had as a company since we made our discovery, because we've got a very clear threshold of what we're looking to do. Even if we weren't to add one more ounce, this is a mine that someone will put into production. But if we can add another 4 or 5 years of mine life, see the grades increase and de-risk through the payback, then I mean, there's going to be nothing like this in the industry.
So you've had some pretty good performance since you stepped in when the thing was trading at 3 cents or something like that, and you've been able to really deliver here in fundraising and growth of market cap, identification of a project that looks like it's going to have it's got some spectacular grades that are really all on its own. Are you starting to get tapped to, hey, you want to sit on other boards? Hey, you want to build something new? Hey, can we leverage your name?
So
And
I'm all in on Blackrock. This is the first real job I've ever had, and frankly, I came in with a lot of connections, and I built a credible team. But we're in this 100% all the way. So I'm not diverting my focus. I've got effectively 120% of my net worth into the company at this point. If there's anything left to pawn to buy shares, I would. But we're going to do this the right way. I want to make people money. I want to make myself money, frankly. So, and that opportunity is clear. Listen, there's been a lot of volatility, right? Nothing phases me anymore. I mean, 3 cents to $1.60. I did a 20-cent financing this year, which was heartbreaking. But at the same time, the volatility, we moved 80%, just between January to mid-March or May. And then we fell back down to 22 cents in August. Here we are now, 50 cents, and I'm still pissed off about it. But the volatility doesn't scare me. It excites me. You're not going to, I've been in junior mining for going on 20 years now, and I've invested in companies like this. I know we're not going to zero. I know that there's real intrinsic value here. And frankly, I can show that, just how undervalued we are. And, the future looks a hell of a lot brighter than it did even just 12 months ago, because there's a very clear path now. We've got a yellow brick road or a silver brick road laid out in front of us. And I think, the train's leaving the station.
Hey, excellent. Well, that's a very good way to leave it and cap the interview off. Andrew, very nice to catch up with you. Thanks for spending some time. And I wish you all the best in wrapping up the year, and lots of great catalysts upcoming.
Yeah, no, I appreciate the opportunity to be back, and I guess we'll chat again on our second anniversary next year.
Well, maybe a little sooner. Maybe a little sooner.
Well, there's going to be a lot of news. There's going to be just a constant drumbeat of news moving forward. Assays, as I said, we're finishing 2 to 3 holes a week now, and I think the next set of results should have some of our first expansion holes. And as I said, if we can show continuity on that 1 kilometer trend, I mean, that's going to lay claim to another 30 to 50% more ounces for us. And I think if the market liked our M&I drilling, they should love our expansion stuff should it hit. So there you go.
Excellent. Well, thanks so much, Andrew. Have a great rest of the day.
You too. Appreciate it.